In this video, I will be showing you how to trade utilizing institutional price levels. Welcome traders! In today's video, we will be delving into a powerful aspect of day trading utilizing institutional price levels or IPLs. I will be guiding you through what they are, how they function, and more importantly, how you can utilize them in your own day trading strategy to help to improve your trading performance. If you're new to my channel, welcome. My name is Emily, and on Mindfully Trading, I share my journey as I grow and develop as a Forex trader. I originally started day trading the US stock market around about 5 years ago, and since then I've gravitated to day trading Forex. I focus on one pair, which is the pound dollar, and I also do this full-time alongside being a full-time mother. I have 2 boys under the age of 2. In fact, I had my second just 3 months ago, so it has certainly been a very busy year for me. And if you are one of my regular subscribers, welcome back and thank you so much for your support, for supporting the channel. I also want to give a quick shout out because I have been receiving a lot of emails from you guys who are interested in getting a copy of my ebook when it is published, Forex Trading 101, an ultimate guide for beginners into day trading Forex. It's in its final stages of editing. I've had quite a lot of feedback, a lot of interest joining the waiting list. If you do want to join the waiting list, you still can do that. So do drop me an email. I'll include an email now on the screen, but I'm hoping it's going to be published soon and I'm looking forward to sharing it with you guys. So as always, all of the resources, all of the software that I'll be using in this video will be linked in the description below, and let's get to it. Firstly, what are institutional price levels? I first came across institutional price levels right at the beginning of my trading journey. So it was around about 5 years ago, and at the time I was day trading the US stock market. In fact, I was actually enrolled onto a course with Ross Cameron from Warrior Trading, and it was in his course that I first learned about institutional price levels. He didn't actually call them institutional price levels, he just referred to them as whole or half dollar amounts. So that gives you a clue as to what they are. But they do have numerous names. Some people call them key levels, some people call them whole and half dollars, institutional price levels, or psychological levels. And they are a combination of all of those factors. Institutional price levels, or IPLs, represent significant zones on a price chart where institutional traders make large transactions. Therefore, these areas, these levels can often be used as a magnet for price to return to and to move to. They are also referred to as psychological levels because the awareness of the institutional activity at these levels can influence the behavior of other market participants. Traders can often pay attention to these areas because they are anticipating the large movements in price. Traders, both institutional and also retail traders, often use these round numbers as mental reference points. And because they're easy to remember, they are often considered as psychological levels. How do institutional price levels work? Well, they work with the flow of price and, more importantly, accumulation and distribution. Before a significant price move, institutions often accumulate a large position in a particular asset. During this phase, they will strategically buy or accumulate the asset over time. Once institutions have accumulated a sufficient position, they may enter a distribution phase where they start to unload or distribute their position to the broader market. Institutional traders will often choose specific price levels, usually considered as support, to accumulate their position. And this buying activity on the chart can create a strong support. Institutional traders will tend to route their accumulation and their distribution phase together utilizing IPLs. So these institutional price levels act as a key magnet for price, whereby the movement of price will be drawn back to these key institutional price levels because they will be related to the accumulation and the distribution. There will mostly be a lot of orders and a lot of liquidity sitting there, and price will be naturally drawn to this area. I have been utilizing IPLs into my trading strategy as an added confluence for quite some time now, and I have seen a massive improvement in my trading results in my trading account that I have with the 5%ers. If you've not heard of the 5%ers before, they are a trading prop firm. This means that you can trade an account with the 5%ers using their company capital, but you take a share of the profits that are made. Now, the 5%ers have a few different packages available depending on your preferences. The hyper growth, the high stakes, and the boot camp package. And I'm currently enrolled in the high stakes program. I'm currently undertaking the challenge for the $100,000 account with the 5%ers. And at the moment, it's going really well. What I love the most about this challenge with the 5%ers is the fact that they provide an unlimited time to pass, which has been perfect for me with my lifestyle as a full-time mother as well as a trader. It's taken the pressure off this challenge, which in the past has always basically caused me to fail. Not having a time limit has transformed my performance during this challenge, and it's helping me to really stay on track and to follow my trading plan. They do have quite a few different account sizes available, which vary depending on what your budget is as well. So you can start off with a very small account of $5,000, or you can go for the largest one, which is $100,000. But regardless to which account size you choose, they do have an amazing scaling plan available as well. So there's always room to grow over time. If you want some more information about the 5%ers, I have got a link in the description below where you can check them out. And if it's right for you, if you have a consistently profitable trading strategy and you just want to level up and make some more money, certainly check them out. Now let's go through some practical steps together. Firstly, I'm going to show you how you can add a super indicator that is also free using TradingView onto your charts to help you to identify the institutional price levels. Then we'll go through some key characteristics and also some ways that you can utilize IPLs into your own trading strategy. So here I am on TradingView, the charting platform that I have used right from the beginning for trading. I absolutely love this platform, and there are a range of indicators on here, both free and paid. We're going to find the one that I use for institutional price levels. So right at the top, we have the indicators button. I'm going to click on that and start to type round numbers above and below. This is the indicator that I use to help identify these institutional price levels. There are quite a few different indicators on here that you can use, but personally, I really like this one. So I'm going to click once to add it to my charts. And if I click the arrow just to have a look here at the indicator, I can click on the cog to open up the settings. Now there's not really much you can do with this. It's not a complex indicator. It's really quite simple. All you can do really is on the inputs, you can choose the number of lines above and below, and this will just simply show you the institutional price levels below where price is currently at. So at the moment we're at 1.2564 and I've clicked on 2 above, 2 below. So that's why we have 2 lines above and 2 lines below. You can't actually change the style on here, but that's why I like it, because it's very simple. If you want an indicator that you can customize a little bit more, there's probably another one out there. So what exactly do these lines show you? Well, let's look at the one at the very bottom, and this one shows the whole number amounts. So this is 1.25000, whereby £1 is equal to 1.25 US dollars. So that can be called an institutional price level. It is a whole number and it is a psychological level. Whatever you prefer to use, whatever terminology, that's what that line is showing you. There's another one here at 1.2550, and then again 1.26, and then 1.2650, and so on. It repeats at every $half or £half amount, depending on what currency you're looking at. Now, some people will also include these levels at the 0.20 and the 0.80 mark. Once again, I did come across this concept when I was trading with Warrior Trading, but to be honest, I didn't really see a massive impact using those quarter levels. They can be considered, but they have a lot less authority. And personally, I prefer to stick with the whole and the $half amounts. For me, since I have been using this in my trading, it's really transformed my performance. It's time to put theory into action. Let's find an example where I can show you how you use the IPLs in a trading strategy. So I have an example for you. I've actually gone back in time. So this isn't a live example with the current market because I'm not looking to take a trade live right now. What I want to show to you is the actual thought process involved in using the institutional price levels. And we can do this perfectly by using a past example. Now I've gone back here to a day, Monday the 27th of October. The way that I would choose this follows my current day trading strategy that I use for trading pound dollar. It incorporates a lot of different factors, and I'm not going to focus on the strategy as a whole because that's not the purpose of this video. If you want some more information on my strategy, I have got other videos. So I will go through the beginning quite quickly, just adding on my previous daily high, observing the fact that price consolidated underneath this during the current day on the Monday. We got a break here and a pullback and a push higher. Now, what I would do for this as part of my trading plan, I would use a Fibonacci from the low of this larger pullback, and I would drop the tool at the high. Now, this would give the 3 lines here, which are the 3 areas for optimum trade entry. They're the areas that I typically would look to get in for a position long in line with the current market. And the way that I would utilize the IPL is the fact that we have already broken the IPL here, which is the 1.26 level. We consolidated along it, we kind of came back underneath, price decided didn't like it, pushed higher. Now, although it's swinging higher, it is going to be drawn back down to this level because once again, we know there are orders and liquidity sitting there. It's a confluence. The IPL together with the fib and the previous daily high, that's my trading strategy confluence. I like to use it as part of that. But more importantly, I will utilize the IPL in my trading position. So let's set an entry now. Assuming that we've had this consolidation and whether before or after, it doesn't really matter. I have a trade sitting at the top of that Fibonacci box. I would have a stop that is below the recent pullback, but more importantly, below the IPL, because the IPL will be acting as a resistance level for price to drop lower, which means that my stop loss being underneath this resistance level just furthermore protects my trade, protects my stop loss from being hit. And then for a target, I would most of the time aim for a break or retest of the high or the 1.5 level, whichever comes first. But again, you can utilize IPLs as a profit target to aim for more profit. And then stretching that on, it does eventually hit that. So it does go to the next IPL level. And you'll find that price can often work with institutional price levels in this way. It is drawn to them like a magnet. To help solidify your understanding of these IPLs, I'm just going to share with you a couple of examples from live trades that I have taken recently in December. So here is a trade that I took on the 6th of December last week as I'm recording this. And you can see, by the way, these trades, they're not perfect trades. I'm just showing you how I've incorporated IPLs into my trade setup. So on this short here, you can see that my short was taken just below this IPL, which is the 1.26 level. My stop above there, as well as integrating market structure and price action. Moving on, I've done something very similar here, but it's a long position and it's utilizing the 1.2550 level. So this is the half institutional price level. Once again, we've got market structure in play. We've got a Fibonacci. I'm long at 1.2559. So it's a bit of a higher position above that 1.2550 level. And you can see this large wick actually comes down. It taps both the previous daily low and also the 1.2550 level. So it's acting as a resistance from price dropping lower, which is why my stop loss is below that level. Now, I actually cut this trade short. It does continue up higher. And I'm going to show you this example as well because this one doesn't actually use IPL so much, and that's why I'm showing it to you. It's not a completely reliable way to trade. I'm not saying that price will always go to an IPL and then immediately go to the next one. We all know that price trading, it's not as predictable and as consistent as that. Otherwise, everybody would be doing it if it was that easy. And that's why I'm showing you this one, because I took a short here at 1.2563. And as you can see, this trade doesn't actually incorporate IPLs. In fact, we trade through the 1.2550 without any resistance and it just drops down. The reason that I took this trade is for other reasons as part of my strategy, and this was in line with NFP news release, which for me at the time was more powerful, had a better influence than these IPLs. And that's why I'm showing this to you, because they don't always work. So remember that. Always remember to prioritize risk. And that leads me on to my final point, and that is common pitfalls of institutional price levels. And more importantly, some mistakes that can be made when using and trading these levels. So it's important to keep this in mind to help you to stop making the same mistakes. And firstly, that is to believe that price will always respect these levels. We all know that price and that trading is not that predictable. It's not that easy, because if it was, everybody would be doing it. So please don't assume that they will always work. If price is above the 1.25 level, don't always just have an order sitting at 1.25 to go long, thinking that it will come down and trigger you in and go up, because you don't know how it's going to react at that level until you see a reaction. But that's why these levels are really useful, because they are levels to observe a reaction. And then you can make a trade plan based on how the market responds to these levels. So if it comes back down and respects it, it might make sense to go long. If it comes back down and breaks that level, and then you may think, okay, this level might work as an area for a retest for a short. So you can incorporate it into a trading plan, but don't just jump into the market without having a solid plan in place. Always remember the power of probabilities, and always remember to prioritize managing your risk. That's so important when it comes to making or breaking as a trader. In conclusion, institutional price levels are an absolute game changer in day trading and in scalping. Mastering their dynamics can significantly improve your trading performance. Remember to practice, to analyze, to review, and to continually grow and develop as a trader. If you found this video helpful, please let me know by smashing that like button. Don't forget to subscribe to the channel if you're not already subscribed, and I'll catch you in my next video. Thanks for watching. Bye.